Interest rates are on the rise. What will that do to the economy? What's up, everybody? Welcome aboard to Bubba's Bottom Line for Sunday, May the 17th. And, well, interest rates are on the rise. As we've said here almost every week, they're not coming down, and the Fed rate cuts aren't going to help you. And now, not only is the Fed not talking about cutting, the Fed is now talking about hiking, which again makes more sense. We've seen the 10-year notes now get up to 4.6%. We've seen the 30 get over 5% once again. Well, again, it's not that we didn't tell you that this was going to happen. It's not that we didn't warn you that this was going to happen, but it was pretty obvious that they weren't going to be able to cut rates, and President Trump was not going to get his way. And of course, Warsh, being more of a hawk anyways, tells us that there's more. There's the Fed funds rate is pricing in a rate hike, not a rate cut. So again, we've got a problem with energy, and of course, ethanol is not the answer. I think that when we look at the bigger picture, the answer is nuclear energy. Let's get back to the basics, something that we mention here each and every week. We need nuclear energy. That is the best, cleanest, takes care of the people who are worried about the environment. It takes care of the cost. It takes care of everything. And of course, with the amount of power now being used by AI, okay, it's only costing you and me more money, where we could solve that problem by using nuclear energy. Okay, there's the Iran conflict. It was total bullshit, which we said when it started, and either we have to take them out or walk away. They're deadlocked. They're deadlocked. It's ground zero or square zero. Okay, and Trump doesn't like the latest proposal. And does anybody really believe that Iran is going to do anything that's going to please Donald Trump or America? They never have. Why would we expect? That's the Einstein theory. If what you're doing is insanity, is if you keep repeating the same process, and of course that's what we're doing. If we're going to do it, let's do it and let's get it over with. Uh, the, uh, the Fed interest rate policy and uncertainty. Again, there's no uncertainty. There's only one way to go, which is higher, which we've already said. The bond market is on verge of collapse. The long bond yield is near a 19-year high. So now, once again, we take us back into just slightly pre 2008, okay, which is when the warning signs began. The warning signs are here now. Nothing has changed in the overall market structure. Okay, we've seen a retail rally, which we'll talk more about in our market report. And again, I'm not telling you that the markets are going to collapse. I'm just letting you know that there are too many damn warning signs. Producer price index surges 1.4%, telling us how far the Fed is behind the curve. Again, producer pricing, CPI was hot. Nothing is good for us, the consumer. And of course, when we talk about inflationary times, there's good inflation and there's bad inflation. Okay. Good inflation is when there's a dramatic demand, when everybody's working, when everybody's making money, and they're buying products, and there's a big demand. This inflation is horrible. It's not built on demand, it's built on trouble. Okay. It's built on losing jobs. It's built on Fed manipulation of interest rates. It's built on allowing the top end of the K to thrive while the rest of the world struggles. I mean, let's see what we got going on here. Wendy's closing 350 restaurants. Jack in the Box closing. Five Guys closing some stores. Uh, Meta laying off people. Other companies laying off people. So where is it? Where does it end? Okay, that's the real problem. And of course, some of the good news of the week is UAE dropping out of OPEC, which vindicates Trump. And of course, with a glut of oil in this country, it's hard to imagine why prices are so high anyways, which the ending of OPEC or the ending of our participation will help and take that better. I think that, again, the job cuts that we're seeing are leading to stagflation, which is the worst of all the inflations. Okay. It's very problematic. It's very concerning. And for those of you who remember the Jimmy Carter era, that is potentially what we're looking at right now. Okay. I think it's a big time to beware. of the bargains in private credit. We already know about what's going on with BlackRock, and you can't get redemptions. So you're going to be offered, those of you who have money, are going to be offered unbelievable deals. And those are not necessarily deals you want to get involved with. That is when you start getting the deals that are too good to be true. Their old saying is they're probably too good to be true. The good news for the week, FINRA day trading ends on June 4th. Now, your broker might not end. Our broker Trader will allow you starting June 4th, taking away the day trading rule. I've heard some are going to extend it still 90 more days, which fuck them. That's a bunch of bullshit. But of course, that's their control of the money. And to keep, if you know how brokerages work, they're looking for the overnight rate. That's the bottom line. But officially, the day trading rule will be over, which is good for everybody. And of course, the last thing is the growth and the ever large enlarging prediction markets. Okay, prediction markets. You've heard of Kalshi. Fortunately, they are controlled by the CFTC. Not that I'm a big fan of government control, but prediction markets are binary markets. They're basically yes, no. Okay, and that was what binary markets were built on. But now you have regulated binary markets on sports, on markets, on TV shows, on results. Everything is controlled. It is regulated, which in this case needs to be because your money needs to be guaranteed. Even Tradier is going into the prediction markets. Coinbase is in the prediction markets, Kalshi, and a bunch of others. So it's a pretty exciting time, especially for those who want to either wager on games or wager on outcomes, wager on politics. You now have or will have opportunity to be involved in binary markets, which will give you just a yes or no, and the yes or no will be based on a percentage. So we'll get more into it as it goes into it. But in the meantime, we've got lots of problems. We've got lots of warning signs. No jobs. Jobs are getting worse. Companies are getting worse. And the big CEOs are out flying around in China, figuring out new ways to fuck us. That's the way that I see it. And this is Bubba's Bottom Line, Todd Bubba Horowitz. It is Sunday, May the 17th. We're going to step out here for a break. We'll be back with our market report right after the break. Well, kids, what's going on? And of course, obviously, we have sponsors of the program. Of course, one of our products, the Daily Trade Finder, has been doing well. Another winning week for us. Just trading daily, selling premium on a daily basis. And we didn't have a lot of trades this week, but we did cash out and make some money. But check it out. And especially with the day trading rule coming off. And of course, we've got Trade Your Brokerage is one of our sponsors. Listen, they saved me $100,000 a year in commission. It's $10 a month flat. Okay. How can I pass it up? Plus the fact that all of our automation works with them. We've got some brand new automation coming out. Our stuff has been on fire. So very happy to talk about Tradier and of course our other brokerage partners, Capital Trading Group. Look, at the end of the day, CTG, they're our partners in many products. We just announced Emergent Edge with them. It's killing it, doing a great job. Check them out. And of course, our investment in the Joy of Mom, which is a wonderful site to help mothers and help groups, and really a great thing. The Joy of Mom, check it out. And of course, our high school program to try to help educate and some literacy for our youth, which we keep getting pushback from the teachers, but we'll get it through eventually. In the meantime, let's get back to Bubba's Bottom Line and, of course, our market report. Welcome back. It is Bubba's Bottom Line. It is Sunday, May the 17th. And, of course, our market report. Well, markets were up last week, and they were up basically every day until Friday. On Friday, they got clocked a little bit, but again, they've gone straight up. So it's not like Friday's sell-off was any big deal. I mean, if you look at the bigger picture, the markets are up 20%. Okay, so a 2% pullback is no big deal. Now, I do think that there are signs. I think there are warnings. I go back to what we talked about in the opening, private credit. Look, I think the markets are going lower. Maybe not tomorrow. Okay, maybe not next week. I think the bigger picture is there's a crash coming. Okay, and again, the crash is not a bad word. Crash is actually healthy, gives you more opportunity. Does scare those, but in the meantime, I still stand by the fact that I believe that this is a retail rally. The volume has been very light, and that's telling me that the big banks the big funds are letting the retail traders push the market up through the pension funds, through the 401ks, only waiting to clock them. Okay, that's what I think. It's an opinion. Again, it's not a fact. So let's not, again, don't run out and start selling. And full disclosure, I am still net long this market. So I'm not acting on what I'm telling you. I'm telling you to be aware. And one thing that we should always be aware of is we are not interested in buying the bottom or selling the top. We want the meat inside the bun, not the top or the bottom. That's too ridiculous trying to say that it's over here. You will get plenty of time. And if we're down again, for example, tomorrow or Tuesday, and we get it down another 1 or 2%, I would think that we'd be on our way to that sell-off, but we may rally right back. So again, we can't say with certainty. In the meantime, the major indices were higher last week. Uh, the dollar still stuck in that range. We have no position in it. The euro currency was down pretty healthy. We're still short. Bonds and notes are getting clobbered and have broken down. And of course, we are short bonds and notes and have been short for quite a while. Again, the bottom line is interest rates are going higher. That's what this market tells you. And I don't think that there's anything else to think about. Okay. Bitcoin got hammered a little bit on Friday, but again, it looks pretty good. It's working its way between 80 and 85,000, close at 79 and change, whatever. Gold got hammered on Friday, but still in consolidation. Silver got hammered on Friday. After after perking up and trading close to 90, it's back in the 70s. Okay. And platinum is still in consolidation. Look, at the end of the day, we're looking to be buyers of gold and silver and platinum at some point, just not this point yet. Okay. Copper, which we were long, we did get out during the week. I got clobbered on Friday as well. The grain markets had a rough Friday. Okay. We're long them and they got clocked pretty good. We'll see what happened. We'll see what the news was all about, see how it plays out over the week. Cattle continues to push higher. Hogs are a little bit lower. Nat gas is pushed up to a profitable position for us now. And crude oil had a big up move. Again, I'm not sure why. Again, I go back to we have a glut of oil in this country. We have an overabundance. We are shipping more than ever. Why? And we don't use Brent. Brent, I understand, should be higher, but why is WTI so much higher? But of course, as I told you, the oil companies would have record profits, and so far the first to report, Shell Oil, record profits. So again, another con job on the consumer, another thing that we can't afford. But this is what's going on here, and it needs to be resolved and fixed. In the meantime, we expect the markets to melt down here. But again, not doesn't mean it's this week. I want to warn you again. Just watch the warning signs, and of course, if you tune into Bubba's Daily Update every day, you know what I'm thinking when I'm thinking it, so I can give you a better idea. But just in general, I think markets are in trouble. In the meantime, this is Bubba's Bottom Line. It is Sunday, May the 17th. We'll step out here for our final break and come back with our commentary. Well, kids, just a quick reminder, our sponsors, well, first of all, Daily Trade Finder, great product. And of course, Trader Brokerage, Capital Trading Group, The Joy of Mom, and our high school program. And let's get back to Bubba's Bottom Line with my commentary right now. Welcome back. This is Bubba's Bottom Line. It is Sunday, May the 17th. And, well, we know about the summit going on with Xi and Trump. And I said last week, but I'm more concerned about it now. I think it's a mistake. China is not our friend. All that President Xi is trying to do is figure out a way to take advantage of President Trump or President Trump's predecessor, and maybe he's laying the groundwork. I go back to China is not a friend of ours. All we'd like to do with China is coexist without much tension. They're obviously one of our biggest holders of notes and loans. But at the end of the day, the summit was bullshit and worthless, and it's not going to help anything. China is not going to give ground, nor is the United States. And I think that, again, in China, Xi's got nothing to lose. He's not going anywhere. Okay. Whereas here, there's going to be a new president in 2 years, once again. And so whatever happens, happens. But I think this was a very large mistake, very similar to the mistake I think we made in Iran. Okay. If you're going to go into Iran, take them out. If you're going to go into China, you have to have an agenda that's not a compromisable agenda. Okay. And this is my concern. And I think, as I said before, the entire summit had more risk for the United States than potential reward. And as far as I'm concerned, I would like to get away from China 100%. I don't like buying our prescription drugs from China. I don't like buying anything from China, to be quite frank with you. Uh, Again, I know that people are worried about pricing, but when you don't have a job, you're not going to have to worry about pricing anymore because you're not going to be working. And of course, they continue to put people out of work. So, bottom line, I think the summit was a waste. That's my opinion. That's how I see it. And I hope you all have a wonderful weekend. This is Bubba's Bottom Line. We'll see you tomorrow with Bubba's Daily Update. Until then, have a great day, everybody. We'll see you later.